And now our first panel is lined up. So I'm going to hand over to Catherine Ford to continue the discussion on the outlook for the Nordic market and what this means for M&A in the region. Catherine.
Hi, John. Thank you very much for handing over to me, and welcome everybody to this first live panel discussion as part of the Nordic M&A and Private Equity Forum. As John said, not quite what we had imagined how it would be, but from a content point of view, us being on Zoom and you watching us maybe in your living room or your home office shouldn't make any difference really to compared to when we actually all get together in Stockholm. I've been joined by a wonderful panel who's going to talk to me about some of the portfolio some of the portfolio strategies in the current global economic slowdown. We're going to spend some time talking to them about how their companies have fared, the impact that the coronavirus and the pandemic and the lockdown across the world has had on their business operations, and just sort of have a look on how things are going to go in the future. My name is Catherine Ford, and I've been a consultant editor with Acurus for the last 10 years. I have a lot of experience moderating conferences like this, so hopefully the fact that we're on Zoom shouldn't make too much of a difference. As John said earlier on in his welcome remarks, we're still really keen for you guys at home or in your offices to get involved. So at the bottom of the screen, you should see a box that you can type questions into, and I will get them here at my computer. So we'll try and answer as many of those questions as we possibly can. Now, before we get stuck into the discussion, I'd like to ask my panelists for a few words of introduction. Dorthe, maybe I can come to you first of all, ladies first. Tell us about yourself and the company that you're here representing today.
Yes, thank you, Catherine. So good morning, everyone. My name is Doris Saunders. I am heading up the legal group, corporate and M&A team at the Nets Group. I've been with Nets now for just over 6 years, and I can tell you it has been quite the journey. In the time I've been there, I joined in 14 when Bain and Advent bought Nets from the Danish and Norwegian banks. Then we went public in 16. We were taken private again in 18 by Hellman and Friedman. And then finally in 19, sort of the loop was complete when Bain and Advent joined the Nets ownership group again. When we merged with Concardis from Germany. So it's really been a truly exciting journey to see this develop.
Great. Thank you very much for those few words of introduction about yourself. I'm going to go through how you're organized on my screen here. Thomas, can you tell us a little bit about yourself and how you fit into this conversation?
Yeah, good morning, Catherine. I'm a carve-out specialist. Which means I help large cap corporates do carve-outs across the world. And when I'm not doing that, I'm on the PwC leadership team here in Sweden, looking after our deals and restructuring advisory business.
Brilliant. Thank you very much. And then next on my screen, I have Fredrik. Fredrik, can you tell us about the company that you're representing and how you fit into this conversation?
Of course. So I'm Fredrik from Hofe. I'm part of the executive team in IFS, heading up corporate development and M&A. And, you know, IFS, we enable international companies in asset, service, and product-centric industries to transform their business models and digitalize their processes by leveraging IFS Cloud, our enterprise application software. We say with a smile that we are the intelligent and agile alternative to the big and slow and complex German and American vendors, no name mentioned. 700 million in net revenue, growing 20% a year, 10,000 customers, 4,000 employees in 50 countries, and we are EQT owned, so private equity owned.
Okay, great. Thank you very much. And then last but not least, we have Jan. Jan, can you tell us about yourself, please?
Yes, hello, thank you for letting me be here. My name is Jan Lund. I am head of strategy and corporate development at Bonnier Group. And Bonnier Group is some sort of a conglomerate or an investment company with a lot of assets within media, such as daily newspapers, magazines, books, and digital online services. And we also have real estate and some sort of division of financial investments. We have a venture arm and also sort of other financial investments in later stage growth companies.
Okay.
So it's, yeah. That's me.
That's you. Fantastic. Thank you very much. Right, let's jump straight into the conversation. And Thomas, I want to pick your brain first of all. As an advisor, you have an overview on how the market has been affected by the pandemic, how companies have dealt with that. We've heard from Jan and Ari in the studio that M&A activity has gone down. Ari thinks that there is a sense of confidence, however, in things going forward. Obviously, hopefully, well, not obviously, but hopefully this pandemic won't be with us for, for the rest of our lives, but it will certainly have an impact on deal making over the next couple of months. Give us your bird's eye overview of where you think companies are at the moment and what some of their primary concerns are.
Well, I think there's a combination of concerns and opportunities, to be honest. Looking at primary concerns, as you put it, a lot of companies, and that goes for many sectors, many geographies, and many sizes of business, they are experiencing a need to redefine their core business, and also a need to accelerate the way they are driving the digitalization of their business. And those two drivers, refocus core business and digital the business, is really fueling a lot of M&A. So there's a lot of M&A activity going on right now to realign the business with the new strategy. And we see quite a lot of obvious M&A. There's a lot of free cheap financing, a lot of companies for sale, and that drives acquisitions and add-on acquisitions. But also there's a lot of what we call forced M&A.
Yeah.
And one example of that is company not wanting to really, but feel forced to acquire parts of their value chain, be it suppliers or distributors, to really go beyond their core business just to secure the value chain. I think that's one of the most significant changes to the market. Stop there.
Where do you think that pressure is coming from? I mean, is that pressure that's coming from owners, from shareholders, from stakeholders in general? So companies down their supply chain saying, look, guys, for us to effectively work with you, it will be great to be part of your actual business. Where is that pressure coming from? Who's driving that?
Well, one of the things we saw very early on in the pandemic is that many companies their whole production line is really depending on input from some key suppliers. Yeah. The problem is they are not the key customers of those suppliers. So in order to secure input, you need to take more control of your supply chain. And that goes also on the other side, on the distribution and sell side of things. So it's more of securing at the cost of margin in many cases, but it's worth it. The other side, which we see is on the divestiture side, is lots of companies have been criticized from their shareholders and from the stock market over many years for not getting rid of low-performing business units, to be honest. It's always, in many cases it has been, let's give this business area one more year to prove themselves. And during the course of the last few months, there is no more patience. So it's up or out. And we see a lot of carve-outs being driven just by the fact that we have lost patience. Sell it. And on the other hand, there's a lot of cheap financing, a lot of companies who want to grow by acquisitions. So there's someone to take care of them going forward.
And I'll be definitely asking the next panel that I'll be talking to, the private equity fund panel, about whether they're going to be making use of those opportunities of companies being forced for a carve-out. But before we get on to that, I'm very keen to talk to our corporate representatives here on the panel, because they all come from very different backgrounds and very involved in very different industries. And I'd be very interested to hear about their experience, how things have been affected for them. Dorthe, can I come to you first of all? I know that you guys have been quite active throughout the pandemic. You've been doing deals before the pandemic, and you're still involved in things at the moment. Tell us about how things have been for you guys. What's been the biggest challenge? Where do you see the opportunity? Have you had to adjust your strategy to cope in this new normal?
Well, I think, like you say, we've been very active for years, actually. Obviously, being PE owned on and off since 14, that drives a lot of M&A, and that's common. We're certainly not seeing a slowdown. When the pandemic hit and we were all sent home in March, I guess we did expect that things would slow down, but they haven't. And I think, like Thomas said, quite a lot of businesses are readjusting. They're either carving out non-profit giving business segments, or just simply, like you said, Thomas, running out of patience with certain areas of their business. Now is the time to divest that. But also maybe looking at where are the risks? What are the opportunities in a market like this? I'm in the payments industry, and obviously e-commerce is spiking. So very interesting opportunities for us to invest and add to that business segment for us. Really exciting targets coming to the market, not only in terms of full companies, but business segments, customer portfolios. So we're seeing quite a rapid movement, and I don't think this is going to slow down. On the contrary, I think this has sort of fueled an already rapidly consolidation that we've been seeing in the market in the payments industry, certainly, especially across Europe.
Can you just shed a bit of light on us on the conversations that there are between you and your private equity owners? How involved have they been over the last couple of months, keeping in touch with you with regards to the business plan that you guys set up together, targets that have been set, any concerns that they've brought to the table and thought, you know what, guys, this is something that we need to talk a little bit about?
Well, we have, so Bain, Advent, and Hellman & Friedman are very active owners of NETS, and we have had an outstanding dialogue with them throughout this ownership period, for sure. They're very active. They know the market very well, so their input is valuable. And I think, obviously, when something like this happens and you have certain areas where you may have a higher risk exposure, you need to go in and analyze, are we doing what we're supposed to be doing? Should we change something here? So of course, there's been a high focus on that and a great dialogue with our PE owners. So that support has been really, really great.
Okay, thank you very much for giving us that little sneak behind the curtain. Jan, tell us about your business. You obviously work in a variety of businesses, but there is a focus on media. You also have been quite busy over the last couple of months when it comes to deals. So again, I'd say you're probably not saying, oh, we've all chilled out and we're all relaxing in our summer houses now. Although it certainly looks as if you're all sitting in your summer houses when I look at you guys sitting in your Zooms with beautiful trees in the background. But tell us about your business. What have you felt are the challenges? Where has the pressure come from? But where are you seeing the opportunities at the moment?
Yeah. Well, I think, for the first 2 weeks there in March, I think everything stopped a little bit, no one really knew what to do. And all discussions we had were about the pandemic in one way or another, and how that's going to affect our workforce, how that's going to affect our investments and everything. But then I can sort of, again, see that actually it didn't stop for us at all. We just got back into business immediately. While as our companies, such as the media companies, that had a lot to do with the workforce working from home. There's a lot of people and tasks that have to be done. It's all from e-commerce, logistics, and warehouse handling, and editors and on newspapers, etc. So there was a lot of dealing with that. And then from a sort of from the effect on the businesses, we're somewhat advertising finance. That of course took a hit. So that's pretty evident. We're not as advertising dependent as we used to be, since we sold our television part of the business. But that has a big effect. But then on the other hand, we have sort of digital services that are really actually having a sort of that are growing structurally, but there's a sort of an extra fuel to that due to the pandemic. Sort of online media services, our e-commerce business is growing. So on the whole, of course, we're somewhat hit, but I think others are hit worse, and we're actually growing, and the structural changes are really faster than they used to be, and the necessity to adapt to that is imminent. And I think we're trying to cope with that. So that's from an organic business perspective. When we look at sort of our holdings and our investments, there could actually be opportunities, and we are looking for investments in sectors that are sort of growing, and sectors that are growing, they typically are growing because some sort of structural change, and also that has actually increased. The change is more rapid. So we've made some investments lately in sort of financial payment services such as Klarna, and some indoor vertical farming, and all those are, although they're sort of on a structural change, maybe the speed of that actually is enhanced by the pandemic. So that's where we are right now.
Okay, thank you very much for that insight. And can you just give us a little bit of insight into the relationship between you and your stakeholders and your owners? What kind of dialogue have you had on that particular front?
Well, in the beginning, I mean, from the owner, it's family owned.
Yeah.
So in total, 93 people that in the same family that own Bonnier.
Let's hope you didn't have Zoom calls with all of them at the same time. I feel that would be even more complicated than this here.
So some of them are quite involved, and that's really appreciated because they are engaged in the business, and some even work in different areas of the business. So they have been very engaged. And in the beginning, of course, we were quite cautious. So sort of the first month, we didn't take some of the opportunities that lay at hand. We didn't take, because we were actually worried about our organic business. You don't know, is the decline going to be 10% or is it going to be 30%? And that's, you know, in a looking at that has a big effect on margins. So actually the cash flows from our businesses, we were afraid that were going to be affected. It has not been that bad. And even some of them have actually performed better. But from now on, I think we are even more, from many ways, I think this has some good effects, that actual structural changes, alluding to what we talked about before, the structural changes that were necessary, the business areas or the parts of the business that sort of, should we give that another year? And it's pretty clear that we shouldn't. While as the other ones that are sort of evolving are evolving much faster. So I think we will actually come out in better shape on the other side due to this, both from a financial perspective and from a sort of market position perspective.
Okay, great. Thank you so much for that insight into your business. Fredrik, tell us about you guys, also private equity owned. I don't know whether you want to start with sort of the relationship and conversations that you've had, or whether you want to give us a business overview first of all and see where you guys are at.
Yeah, I mean, as everybody else, in March, we experienced the same shock as everybody else did. But we immediately decided that now it's the time to be able to kind of have two thoughts in mind at the same time. Of course, we took action to protect the business. I mean, nobody didn't know what was going to happen. So, you know, protecting your liquidity, taking action to ensure that, you know, we have good control of cost. You know, the whole team, the whole 4,000 people team immediately took action in terms of reducing time to work and salaries and similar. But we also decided that, you know, we're going to continue to go and look for opportunities. And we decided we won't stop any of the dialogues that we were in. Of course, deals and deal processes, that everybody kind of pulled the brakes. But we said we're going to continue all the discussions we were having. And what we did see then in June was that in June, things started to move. We got more inbound suggestions. The dialogues that we had before the pandemic situation kind of exploded, those were productive. And from a deal opportunity perspective, now we are back to, I would say, the same level of activity as we were pre-COVID. remember, I'm in the tech industry, I'm in the software industry, and as you know, I mean, if you look at the development of the tech industry in the US, where kind of Nasdaq is up 24%, and you know, the big tech companies are prospering. Of course, you can understand that the activity in our sector is high right now, and there are a lot of opportunities. And you know, there is no kind of, I don't feel any kind of pandemic depression or negativism when it comes to opportunities to do deals.
But do you think that's fair to say that that is something where your sector and a handful of others uniquely stand out in this pandemic? Because obviously you guys are generally an industry that's very nimble. You're online in the first place. It's all virtual to start off with, compared to, say, something like the hospitality industry, for example. You are much more able to sort of run with it.
No, I agree. I mean, this reflects an industry that, you know, currently, you know, is there is a lot of activity in the tech industry, but you know, this is not artificial. Remember, we provide solutions that enable customers to kind of transform their business models and digitalize. The underlying demand for digitalization tools that kind of enable this transformation didn't go away because of COVID. It's still there. It's actually so that there are some good examples of where customers are accelerating their digitalization initiatives right now because of the pandemic situation. Yeah. We have a customer in Sweden, Munters. They are one of the leaders in dehumidification solutions, and they had before the pandemic situation plans to digitalize their field service operation, doing more remotely. Now with the COVID situation, their service techs couldn't go to visit customer sites. They needed to enhance their capabilities to do remote assistance. And together with them and a partner, we could put together that type of solution and put it in place in 2 weeks. And it's operating now, and it's a great demand for that solution also with other customers. So that's an example of that the underlying demand for digitalization or tools to digitalize businesses is there. So therefore, I mean, in our case, the high activity in the sector is not artificial. It's driven by underlying demand from customers.
Well, that's fantastic. Thank you very much for sort of sharing that insight. And I can absolutely understand that anyone that had slight misgivings or concerns about digitalization, that has all been addressed over the pandemic and made it clear how incredibly important it is. Thank you very much, all of you, for your insight. Thomas, I'd like to come back to you now and spend some time talking about this issue of the carve-outs. I think all three of your co-panelists have made the point quite nicely that actually at the moment, the focus that all companies are doing is focusing on their core operations and shedding anything that in any way might no longer be entirely up to scratch. There are some sectors, I think it's fair to say, that will be less affected, and some sectors that will be incredibly affected. If you cast your mind, Thomas, through your client portfolio, are there any sectors that really stand out to you as, do you know what, this is where we're going to see the bulk of activity going forward, and others where you say, do you know what, this is probably a sector that I'm not going to be touching on an awful lot over the next coming years?
Well, I think there are some trends which are cross industry, and then there are some, you know, sector specific things that we are saying. You know, looking at, you know, the major trends here. One is the no patience argument, as you mentioned. You know, we won't give them another year, so that drives carve out. Another thing which both Dorthe and Jan also alluded to is you know, carve outs as a means of financing other stuff, and I think I've never, you know, heard or seen so many companies admitting that they're selling a business just to finance a digital journey in another part of a business. We've seen it, you know, over many years, but now they admit to it. It's because we need the money to finance. And then the third thing is really the redefinition of what's core competence.
Yeah.
And that's partially due to this K-shaped recovery, with some, truly tech-enabled businesses are thriving, whereas others stuck in the past are really struggling and getting closer to insolvency. And that redefinition of what's core competence is also fueled by private equity entering new sectors. Look, for instance, at how private equity are reshaping the financial services industry in the Nordics. Look at Nordic Capital, for instance, how they are transforming parts of the financial services business. So that industry shaping activities of both private equity and also the digitalization as such, that also drives carve-outs. So there's quite a few underlying trends.
Can I just come back to something that you said right at the beginning of your comments? And you said that there are companies that are considering selling assets only to fund digitalization. And I'm a bit surprised to hear that, because with money being so cheap at the moment, why would you sacrifice one part of your business when actually you could just go to the money market and get some money there instead?
Well, I think that's a very, very good question. And I had that discussion with a large company this morning, as a matter of fact. And the thing is, it's a question of bottlenecks.
Okay.
Financing might be a bottleneck, but management attention, management capacity or bandwidth is also a bottleneck. We see, the company I talked to this morning, they have 8 different business areas. And they need to do step changes in terms of digitalization or technology in a broader sense in all 8. They don't have financing to do that in all 8. But even if they had, they don't have the management bandwidth to drive that transformation across all 8 at the same time. And in addition to that, this redefinition of what's core in the industry they are in sort of puts 2 of those business areas out of core. So there's more than just the cost of money.
Okay, that's really interesting to hear that sort of perspective on things. I like the topic that you raised of management bandwidth, and I would imagine that at the moment management seems to be spread very, very thinly, tackling all sorts of problems. Dorthe, while we were talking about that, you were nodding. Tell us about, is that something that you guys find a bit of a challenge, or is it something that you're paying increased attention to? Like, how can we actually make sure that we have all the people on board and in the right positions to take us through this next level of growth?
Well, I think for sure that's a topic that most of us are experiencing through a pandemic or a crisis in general, and certainly the one we're seeing now. It takes a lot of realignment of your strategy, or at least revisiting your strategy to make sure we're still doing what we want to do. And even if you don't have to sell off parts of your business to make way for other things, you could certainly consider whether some of the investments that you were planning to make into certain segments, whether those are still worth making in light of, changed customers. It could be a higher risk customer portfolio you're facing, depending on who your customers are, who are your business partners, vendors, and so forth. So I think really sort of realigning your strategy, spending a lot of energy on that from management side, and assessing whether you want to carry out those investments that you were planning, or whether now is really the time to say, you know what, we were not going to do that. We're either going to invest it elsewhere. It could be in digitalization, but it could also be in a different type of acquisition that might be a better fit in light of what's going on right now. And I think that's something that you have to be very careful of as management, and have a really good dialogue, in our case, for sure, with our owners. I'm sure that goes for whether you're PE owned or not, to make sure that management has the right focus, that you have the right teams in place to handle future integrations. Some targets require more integration work than others. That's also something to consider. Is this really the right target for us right now? Do we have the bandwidth when we close the deal to make sure we achieve the synergies that we're hoping to achieve? That's something to consider when all of a sudden you might find yourself spread a little bit thin from management side with tons of urgent matters to attend to.
Okay, Great, thank you very much. Now, we sort of segued slightly into a topic that I think is definitely worth having a conversation about. On the one hand, access to money, but also valuations, and I think those two sort of go hand in hand. Fredrik, can I first come to you and ask you a little bit about where do you see valuations in your sector at the moment? Do you feel that they are sort of broadly in line with where they should be? Do you think that people are getting a little bit greedy? And then talk to us also, obviously you're in a unique position, well, not unique position, but you've got a private equity fund behind you. Talk to us about how you are coping with the daily financing needs.
Yeah, so on valuations, I think, to be honest, it is about the same situation as it has been during the last 10 years. The pandemic situation hasn't really changed the valuation situation in the segment where I operate. And let me just explain a little bit. I mean, our thinking when we look at the M&A opportunities is that, you know, it's kind of far better to buy a wonderful company at the fair price than a fair company at a wonderful price, as I think Warren Buffett said. And I say that because our experience right now is that kind of wonderful companies, they are still attracting a fair price, and even if it's a pandemic situation. But fair companies, they are suddenly cheap. They're out there. And I have two kind of recent examples. We've been engaged in two transactions recently, one in Europe, that was a horizontal software target, and the other one was in North America. That was a leader in its niche. And the European one, that was available at a very attractive valuation, you know, certainly, sure. But after due diligence, it was obvious that the quality was lower than expected, and we stepped out.
Okay.
So even though the valuation was very attractive, yes, but the company was not a quality company. The North American target, however, who is a leader and a high quality target, has proven to be very high quality, also during due diligence. So, you know, in my mind, high quality companies still attractive valuations.
Yeah.
Whereas there could be some companies that suddenly are cheap, but they are also associated with lower quality. At least that's my experience, hands-on from the last few months.
No, that's interesting. And those obviously would then take up this management bandwidth that we were talking about earlier. Thank you very much for that insight, Fredrik. Jan, can you tell us a little bit about sort of where you see valuations in your sector? Are there any concerns that you're experiencing at the moment?
I mean, in the beginning of the pandemic, it was quite clear that who could tell the value of a company, because we had no idea where everything was going. And in terms of consolidation and perhaps, you know, mergers, what is the relative valuation, etc. So there was a lot of effects on that in the beginning. Now I think partly due to the fact, as you allude to Catherine, you know, access to money is still there. So when it comes to healthy companies, they're back to sort of valuations that were pre-pandemic, and some even better, depending on where you are in the structural change of things. So I agree to that. We would want to invest in companies that are healthy in the long term, and we're willing to pay a fair price for that. And that is typically not lower now than it was sort of 6 or 9 months ago.
Yeah.
So and the development of valuations, of course, is dependent on access to money. There's a lot of capital out there that needs to be invested. That, of course, is an effect. But in the long term, our investments are for the long term, both our strategic investments and also our financial investments. A fair price is always a fair price, and we're not afraid to pay a fair price at this point in time due to the pandemic, so to speak. Yeah.
The pandemic doesn't get you out scot-free, does it?
No.
It can be used for many things as an excuse, but this is not one of them.
Okay.
Thank you very much. Now Jan, Fredrik, please.
Sorry. I just wanted to kind of comment. What we do see, however, is that when it comes to deal structures, there are more discussions now about some factors that maybe were a little bit, in the background before. And for example, insured deals, reps and warranty insurances.
Yeah.
To ensure that the sellers can get a very clean exit, because they don't want to kind of be connected. Well, for all the reasons that are linked to uncertainty, earnouts in some situations, earnouts comes on the table, and the general topic of high deal closing certainty. If you can prove high deal closing certainty, you can get a benefit in a slightly more kind of uncertain time like these. So deal structures, there are other type of discussions, or more intensified these days.
Okay, thank you very much. That's a really interesting point. Now we've got a few more minutes left, and there are no questions from the audience, but I wanted to take this opportunity to link our session to something that Cecilia said in her opening keynote remarks. And she spoke an awful lot about the importance of the global economy and some of the challenges that we were experiencing there way before this pandemic ever hit. She spoke specifically about the US-China trade wars, the lack of trade agreements, and she said very clearly that Europe needs to have an open global market to effectively recover from the pandemic. If you guys could take a step back from your everyday operations and what you're doing in your business, give us your outlook on the global economy, where you think things are going, and what level of optimism or pessimism you have at this particular stage in the game. Dorthe, can I come to you first with that one?
Sure. I mean, that's a big question.
Yeah, sorry.
No, I mean, obviously, overall, I think it would be unrealistic to think that everything will just be normal again in a few months. We're seeing partial shutdowns, I suppose, all over the world, certainly in Europe at the moment, and that will, of course, affect certain segments. Obviously, some much more than others. If you are exposed to those segments, that's certainly something to take into consideration over the next, maybe I would say at least a year, where we would expect ups and downs. So I'm not super optimistic for my own sector, though. I do think that we will continue to see a lot of activity on the M&A market, both in terms of acquisitions, but also just mergers, consolidations. I think we will continue to see that. And at attractive prices, I think, as well.
Okay, thank you very much. Thomas, from your side, what are your expectations? What's your outlook?
Well, it's sort of like, how would you like to save the world kind of question, isn't it? but looking at this, global question from an a deals or M&A perspective, we had a discussion the other day about what's new in negotiations, what's new in deals discussions, and we highlighted 4 things. The uncertainties around free trade, global trade agreements and what have you, that drives uncertainty when it comes to supply and also sales and distribution. So you need perhaps to add to your supply base more local suppliers. So that drives M&A. So that's the free trade argument. And the other thing is, which is something we've seen over many years, but now it's accelerated, and that is the introduction of ESG and climate questions into the deal question. And that's a very broad topic. It could be labor-related issues, but also climate, CO2 footprint. We feel that companies are taking, as politician doesn't take responsibility, the companies has to, and we see an uptick in that, and I truly welcome that. The other thing is around people and culture. The pandemic has shown that companies treat their employees very differently, and it has also become very clear how huge a differentiator, the way you treat your people is in the market for talent. And that's also, I think I've never had so many, culture and people discussions in a deal negotiations as I have right now. Yeah. We've been looking for it for years, but now we're actually having it. And the other thing is, and that's driven by the digitalization and investment into new technology, there's a we've been talking in the boardrooms for years about cyber and IT security. But now those discussions are just exploding because everyone working from home has just made it clear how vulnerable some of our IT systems are to people not supposed to be there, basically. So we see all of this getting into deals discussions, which is, triggers very creative reactions from lawyers and tax people and finance.
I'm delighted to hear that people and culture has become much more an issue. It's one of my pet topics when it comes to M&A and PMI, that culture and people don't get taken into account as much as they should. And if this is a positive that we take away from the pandemic, that's fantastic as far as I'm concerned. Thank you,
Excellent.
Thomas. Jan, what is your outlook? Talk to us about that for a few minutes.
Well, I mean, it's a little bit, as Thomas said, it's sort of the save the world question. And being a media company, we're actually sort of covering the world rather than saving it. But we hope that helps. And actually, what is the sort of outlook from an economic and trade perspective is a great deal a political question. And that's, of course, very difficult to predict, I think. From an economics perspective, I think the development of the pandemic will, of course, affect. Do we see second waves, etc., and how will that affect general economics, macroeconomics, and hence also sort of valuations and expectations on companies? And then when it comes to trade wars, one sort of hopes that people come to their senses, because actually, I mean, doing trade has been quite good for humanity for quite some time. And even though politicians seem to have difficulty to agree on these matters, whether it be, within Europe or China or US, etc., I hope they come to their senses. But my prediction on that, I don't know really. And then there's the last thing, and that's of course in the very long term. Speaking about saving the world, the climate matter. And that may, of course, have effects on politics and economics in the long term. I mean, when climate driven events actually force a great deal of people to move from where they live, then we have sort of the next big political issue to deal with. And at this point in time, it does not seem that politicians, at least internationally, don't seem to find solutions to that as of yet. So, but let's hope for that.
Let's hope for that. Let's definitely hope for that. Fredrik, final comments from your side, please.
Yeah, I mean, we don't dare to make any macroeconomical kind of forecast. There are others doing that in our industry. Gartner has predicted, 8% growth for the enterprise application industry next year. But we decided, let's have a practical approach. We expect a more volatile market short term, but let's stay close to the customers, listen to them and understand how the demand develops. And it's clear that, even short term, the underlying demand to transform the business models of our customers from, selling products to sell outcome, the importance of services as part of the value proposition from our customers is increasing and it's accelerating. So the underlying demand is there, and we prepare and we are slightly positive on a midterm perspective that this is going to go in the right direction. But it's impossible to kind of give any kind of macroeconomic, that we don't dare to do that.
I feel it's a tricky one this year.
Yeah, it is.
Okay, listen guys, thank you so much. I feel that on many of these topics, we've literally just scratched the surface, but it's been wonderful talking to you. I hope the audience has had a great time. Thank you very much. And I do hope to see you again in person next year. Thank you very much and have a great day. John, over back to you.
Catherine, thank you so much for that. And of course to our speakers, Thomas Fossum, Jan Lund, Dorthe Rosenkilde Saunders and Fredrik from Hofe. Particularly interesting to hear about the culture and climate issues, which we'll pick up on in the ESG session later today. Very quickly over to Auri Atkallio, our Nordics correspondent, just to pick up on some of the themes there. They discussed e-commerce, that came up in the comments that you gave us earlier, Auri. In the wider consumer space, would you say there's a balance of growth and distressed opportunities?
Absolutely, yes. So some consumer segments have suffered more badly and will probably be under a lot of pressure for some time yet, such as hotels and restaurants and nightclubs. And other places where you visit physically, but then there are other consumer businesses that are doing extremely well. Anything to do with sort of home improvement or DIY or magazines and things like that are actually seeing a boom because people have more time and money and energy to spend on their own surroundings.
Yeah, and of course, bricks and mortar retail, as distressed in the Nordics, I'm sure, as every other region. Very, very quickly, just
Absolutely.
finally, we heard a lot about new industries, particularly payments, vertical farming. Is there a degree to which you think, or to what extent rather, has COVID sort of brought the future forward for Nordic corporates?
I think it has definitely pushed it forward. So that transition was already happening. It was already going to happen. But the pandemic has just accelerated this process, and it has really forced many companies to do the digital jump earlier than they were kind of planning, or where they were on the journey to do that. So it has really just pushed things forward, and it has kind of stopped the conversations whether or not we should do this in many cases, but actually made it clear that yes, we have to do this.
Thank you very much indeed, Auri Artakallio there, our Nordics correspondent. And many of the themes that we had in the panel there will be picked up in the private equity forum that we have later today, particularly around dry powder, I think, and how money will be put to work.